Hi guys, it is Thursday, September 12th. Seems like I've been doing videos all morning, but it's a good day to do them because of the rollover today and the transition of volume from the September front month to the December front month. So when that's happening, you tend to have the market a little bit all over the place, and it's the efficacy of the tools that I use, the day trading tools that I use, are off just a little bit, or can be off a little bit. So this tends to be a good day to do this. So Bella reached out and asked initially about XLF, and then she submitted a follow-up question. You know, how would I go about looking for a good entry in this? Well, those of you who have been following me for a while know that I'm a very, very big believer in structure, whether it be a single security, the overall market, an ETF, a particular industry, whatever the case may be. And the premise behind it is, you know, if you stock a barrel full of fish, it's not going to be hard to catch one, as opposed to going out into the lake and fishing. Yes, so it's the same kind of premise, right? If you get all the structural metrics right, if you can determine what the right structural metrics are and you get them right, your chances of picking a winning stock are exponentially higher. So I thought I'd take a look at XLF and just kind of walk through it for Bella and anyone, obviously anyone else, any other e-members who happen upon the video and think it is something that's worth their time. So we've had this pullback in XLF. The overall market is pulled back, so it makes sense that the financials have. And then we bounced, you know, off of this low right here, right? Which makes sense. We came down into this area, right? I don't have it drawn in, and bounced. And we've had a nice little run. We gapped higher here, right? And now we've settled in. Now the question is, are we going to pull back a bit, or, you know, what exactly is going to happen? Well, there are a couple of ways to approach this. One, if you think the overall trend is correct, you can just enter the market, right? And use position sizing to protect yourself, i.e., you know, you can say maybe this swing low is your stop. If we trade below this level, that's your stop. Your entries here. So the difference between the two, divided into the amount that you're willing to risk, the amount of your portfolio or your account that you're willing to risk on the trade, would determine your position size, right? And obviously the bigger this distance is, the smaller the number of shares that you're going to buy, right? There's a video on this topic in the I think the member tools section, so have a look at the position sizing video. It goes into a little bit deeper depth on it, but the point is, you can risk 1% of your account if you enter it here with the stop here, or you can enter 1% of your account if you enter it here with the stop here, right? The difference between the two being the number of shares that you buy, right? That's one way of entering. Just saying, you know what, I like the trend in this thing. Is you know, it's moving to the upside, and I like it here, and I'm going to buy it. I'm going to step in right here and buy it, right? That's one way. Most people don't really like that way, even though you know, if you compare it to your chances of not paying attention and missing it when it does pull back here and give you a shot, it's probably more effective. And again, you're not risking any more of your account. You're just not able to buy as many shares as you might otherwise be able to buy. This, by the way, is another place where you could have your stop. Instead of having it all the way down here, you could have it on a break of this uptrend line here, right? This also is a place where you could consider looking for an entry, right? Come back, test the uptrend line again, and look to get long there. Obviously, you know, if you buy it based on a trigger at the uptrend line and then it breaks the uptrend line to the downside, then you stop yourself out of the trade. The value of that being that you are able to get in with a much tighter stop, and consequently your leverage is higher because you're able to buy more shares, right? Another way, and I grant you that you would have to have this, but another way to do it would be to have a vehicle like this vehicle that I created, right? And all this is it's called the pit indicator, right? And it looks for pivots to the upside in something that is moving, that is in a stock that's trending up, right? You have a lot of false signals, but you can set it so that you can set it in such a way that you have a lot fewer of them. But basically what it says is, you know, you wait for a stock to pull back, and then you wait for it to give you to take out the high of the lowest bar in that combination, and then you enter you enter the stock, or you enter the ETF, or whatever it is you're trading, right? So in this case, if I blow this up a little bit, it actually doesn't have to close push above. It has to stop going down is basically what happens, right? It goes down for a certain number of bars, and then once on the very next bar that it doesn't make a lower low and closes, it effectively gives you a signal, and you can enter at that time. You can say, now I'm looking for an entry. There are a lot of different ways to play this, right? Here you would have had several tight stops on the way down, depending on how you played it, especially if you didn't have like some kind of oscillator or something like that you used as an overlay. But you would have ultimately gotten in here, right? And you would be sitting, you know, fairly well. Another way to play it, you can watch the pivots, right? And then as soon as you get a higher low, say for example here, right, you got a higher low here, you would have been stopped out, but then you got a lower low pivot, and then you got a higher pivot, right? That could have been your entry. Similarly, if you go back a little bit further, the same thing happened. Down, 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 higher, go, right? So there are a lot of different ways to look at this, and you could be setting up for a very nice one here, you know, assuming that we get some kind of pullback and then a pivot to the upside. That's what you would be looking for. You don't need this indicator to do this. To use my indicator, you would have to have TradeStation and have the actual indicator. You don't need it. You can do it simply by waiting for it to pull back, which it looks like it's starting to do a little bit more today, and then you watch for the first time it closes without making a new low, right? That will effectively give you the signal, right? So that's just a couple of ways that you can look, you know, to get into the stock. You can use oscillators. You can average yourself into the position using this as your ultimate stop. There are just an immeasurable number of ways that you could use to enter a position and then assign your stop. Okay, I hope this is helpful. I will try to keep an eye on this, and to the extent that I see a signal fire, I'll post a video just poking you guys, letting you know that maybe there's an opportunity there, Bella used specifically, and then you can proceed from there. Okay. Again, I hope it's helpful. You have further questions about it, ask the trader at theartofsimpletrading.com, and we'll see you at the next video.